When buying real estate, whether it's your own place or investing to make money, you need to know how it works with supply and demand. We focus a lot on this channel around demand, and with the latest interest rate cuts, you've probably got a little bit more demand in the market. But I want to share with you exactly what's happening in the market when it comes to building new homes. Are we building enough, and how do we get over this housing crisis? So if you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now I'm going to show you a dashboard that I actually shared on this channel about 2 years ago. And it's crazy to see how things have changed, but why we are in this position where there's not enough houses being built, irrespective of the government coming out and saying we need to build more homes. So yes, we have a demand side issue, which is immigration, and then local people being able to buy more because now interest rates have cut. We also want to focus on supply, because the truth is, if we don't build enough homes, there is no crash coming. And I know that some people are waiting on the sidelines to say, hey, I hope the market goes down. But it's a simple law of economics. And I'm going to simplify it right now. If demand is high and supply is low, prices will go up, irrespective of what your thoughts are and what my thoughts are. The market does not care about our emotions. But if supply is higher than demand, that is when you'll see price corrections. Now let's dive into the UDIA Housing Index. Now what is this? The UDI Housing Index provides a quarterly health check on the state of the new build Australian housing market. Drawing from a range of data sources, the UHI provides timely indicators for changes in demand, supply, and costs for new residential properties across the nation. When you're looking online, you're going to get data that's out of date. And it doesn't matter what source you're on. You've got to match that data with what's happening on the ground floor. And that is where speed is key. Because if you rely on data from 6 months ago in a market that moves so quickly, if you're not indexing your numbers, you're not going to know what the true value of a property is and where it's going to be in 12 months time. Now, what I want to show you is the actual dashboard. Now, there's a lot happening, but it's an interactive housing index chart and dashboard. So this is a bit of a summary. I'm going to come back to this as our summary anyway, but let's focus on demand. Now, what we're seeing here is a couple of numbers. This is based on the December quarter of 2024, and you'll see this number saying 110. Now, another number that I want to show you is the national long run average, which is 101. Now, 100 is pretty much where it's sort of like, that's the norm. And in this case, 101 is the average. But if we're at 110, that means we have higher demand right now than the long-term average. Now, what I will show you is in 2020, where this number actually fell to. It was around 70. So that can tell you during that time there was mass fear, and what you would have seen in that time is not as many transactions happening. Fast forward to when interest rates started dropping and they were quite low, we went as high as 128 to 130. Now we've seen things slow down. Obviously we had the rate hikes and now we're in a position where it's at about 110. Now a couple of key numbers to look at is demand sub-index, which is seasonally adjusted. It's down 4.4% quarter on quarter, and it's down 3.5% versus last year. And that is very important to know because it basically tells us that we've come off this high of 128, we're now at 110, and although in the short term, because people were affected in terms of their borrowing capacities with the higher interest rates, we have seen things slow down. However, it's still much higher than the long-term averages. Now that looks at demand, let's look at supply. And again, we've got a number up here, which is 94. And again, 100 is sort of the average here, and the national long run average being 100.1. Now what you can see is in 2020, again, no one's building properties, and we went down as low as 90 or 88. And then we went as high as at about 110 when we had the home builder grants and packages come out. Since then, we've had a complete drop off. We've seen a low of close to about 88 to 89, and we've seen a small bump up, and it went as high as 96. But what we can see is quarter on quarter, we've dropped by 1.7%, but year on year, we're higher by 3.7%. Now, despite this short-term change, and it's looking positive, we're still much lower than where we need to be. And when you combine the two and you say, well, if the supply indicator is saying 94 and the demand indicator is saying 110, well, you'll probably see prices higher. And what you can see is in the actual summary of this, we're at 91, which is much lower than a quarter on quarter, which is 2.7%. It's down year on year by 0.8%. And what we can see is the highs here of 109 in 2021. And that would have been when, people are transacting in a lot of property and we had interest rates so low. But now we're at lows, which we haven't really seen since the lockdowns. And even before that, we really haven't seen those numbers from when this was actually capturing it for over 10 years time. Now, something else to look at is the Housing Industry Association's reports as well. The latest HIA Economic and Industry Outlook report showed that New South Wales is set to begin construction of 252,000 dwellings over the next 5 years, which actually sounds like a lot, but it's not, which falls more than 120,000 homes short of the state's national housing target. HIA Executive Director for New South Wales, Brad Armitage, said the high cost of residential land, particularly in Sydney, impacts the housing supply needed for the state's growing population. Low unemployment, ongoing population growth, low vacancy rates, and a cut to the cash rate should help entice more buyers into the new home market, but supply-side barriers are preventing them from getting into a home. Data showed 5,190 detached houses commenced construction in New South Wales over the September quarter of 2024, registering 1.7% lower compared to the previous quarter. Now, something that's not helping this situation is the amount of bankruptcies we've seen within the construction industry. In 2023-24 financial year, a record 3,000 construction firms in Australia were declared bankrupt, insolvent. New data from ASIC suggests that construction insolvencies have worsened in 2024-2025. In the first 7 months of the financial year, 1,999 construction firms were declared insolvent. This was 26% higher than the same period in 23-24 and 69% higher than 2022-2023. I'm not emphasizing 69% because of you dirty dogs. I am actually saying that because it is a massive, massive number. And we thought it was bad in 2022. If you've been following the channel for a while, I remember when the data was coming out and saying, wow, that's a lot. Now we're registering almost 70% higher than those numbers, which means the situation around insolvencies and construction firms is not getting any better. In fact, it's getting worse. We can see it clearly here in this graph, which is Australia's companies entering external administration, and all you've really seen is up only when it comes to construction, and it's by far the highest when you're comparing it to hospitality and professional services. So no wonder when you look at this in terms of dwelling completions, we're nowhere near where we need to be. Now, what you can see here in the blue line is the actual amount of dwelling completions, and in the red up here is Albo's housing target. Now, I wonder how much of a controversial topic this will become in the next election, which is coming up soon. Because you can come out and say, I'm gonna promise we're gonna deliver this many houses, but the reality is they never came close to this. And this is why it's so important that, not to get involved in politics, but you need to take what these people say with a grain of salt. I don't care if you support Albo, you support Dutton, or anyone else. I think the reality is you've got to figure out what your plans are and then adapt, because the government's not going to suddenly come and save you. You've always got to look out for your own back. And that is why I am so passionate about self-retirement. And that could be early retirement, or it could be when you're 65 or 70, but it's on your own terms. And that's why getting started early is the key here. Now, the crazy thing is it's playing out in front of us, and I don't know how many people are aware of it. And if you're aware of it, are you doing anything about it? Because the policymakers want to force Australians to live in high-rise apartment towers, assuming it will improve affordability. And what you can see here in this graph, I'm going to break it down. On the left side, you've got houses, townhouses versus apartments. So in the blue, you've got apartments, and then detached houses are in the red. It's showing the rise in costs to actually go ahead and build apartments or detached homes. Even if you are to look at high-rise apartments, you think about how many are getting approved. In 2014, 2015, which is about 10 years ago, you saw all-time highs. Since then, it has been down only. And that's across pretty much all states. And you're recording numbers now, which is like 60% lower than where the peak of this was. Yet, if you look at immigration and the population change here in Australia over the last 10 years, we've had the complete opposite, which is up only. Now, the Productivity Commission actually released a research paper entitled Housing Construction Productivity, Can We Fix It? I don't even think Bob, the builder, could fix it at this point. But it tells a story of decades of poor performance. The PC found that building times for new homes have risen significantly in the last decade, and less than half as many homes are being built per hour worked today compared to 30 years ago. A more comprehensive productivity measure that controls for quality improvements and increases in the size of homes has declined by 12% over the same time. What that effectively means is it's taking longer to build homes that are so much smaller. And you can see it clearly in this graph, where you see this pink line going up, which is 49%, whole economy labor productivity. When you see dwelling construction labor productivity, it's actually just falling at minus 12% and then minus 53%. Now that's looking at the supply side of building new homes, looking at buying a new home. What does it look like for renters out there? Now, I'm a rent investor myself, so I rent where I want to live and I invest in areas that actually make sense when it comes to logic, data, and statistics. If you want to know a breakdown of exactly how that works, you should check out this video. It's 36 minutes and I promise you it is gold. It's going to allow you to understand the process that you need to follow, a system that's repeatable to go out there and invest in property to build a portfolio so you can retire early. But we also look at the rental market because at the end of the day, we're not just investors, but I also want to look at the market as a whole to see, is the economy productive when it comes to renters and owner occupiers. Now, the Australian rental crisis continues with the vacancy rate tightening once again. An expert prediction pointing to further falls off the back of low supply and increased migration. The latest rental vacancy data from SQM Research showed the national vacancy rate fell by 0.5 percentage points in January to just 1%, with the number of homes being available for rent across Australia dropping from 47,336 to 31,822. You can tell it's the first time I'm reading this article. The vacancy rate was also down 0.1% year on year. SQM Research Managing Director Louis Christopher said the sharp decrease in rental vacancies strongly indicated Australia's rental market crisis was not over and could deteriorate further. It's not great news if you're a renter out there. It looked like there was an easing in the vacancy rate at the end of 2024, and we were coming out of a rental crisis, but that's not the case now, he said. The rental vacancy rates have completely tightened up once again to some of the worst numbers we've seen during this rental crisis. Some cities have hit record lows or close to record lows, and there are cities recording vacancy rates below 1%. For example, Hobart is just 0.3%, which is the lowest since our records began in 2005, which is 20 years ago. And Brisbane fell to 0.8%, which is the second lowest vacancy rate we've recorded for the city. Now, I know a bunch of people are going to come out in the comments and say, this is so bad because it might be investors, it might be immigration, but the reality is it's a mix of all of that plus more. There is so much happening when it comes to policymakers, how they actually run the economy. It's not run like a business. It's almost like, yes, okay, well, these people make the most noise, that's where the money should go. And when it comes to housing here in this country, it's such a controversial topic. Everyone wants to own homes, everyone wants to become an investor, everyone wants to rent, and everything in between. You've got to figure out what is important to you. Because if you're not someone who needs 5 bedrooms and a big house, then you don't need to live in that lane. But at the same time, if you're someone who absolutely hates renting, you need to figure out a productive way to own your own home. Because simply going out there and saying, I just got my own place and it's an apartment, I'm gonna live in here forever. If you're planning to have a family, chances are you're probably gonna move out in 2 to 3 years. So instead of kicking the can down the road and thinking, I'm just gonna figure out my problems right now, think long term. And I know sometimes that will involve sacrificing the short term for the long term, but this is why I talk about exactly in my book, which is Retire Filthy Rich with Real Estate. People think it's just, hey, how do I buy more real estate? But it's about how you have real estate fit into your life so that you can become a happier person with better relationships. So if you're interested in that, it's available right now across all retailers. So definitely go ahead. I'm gonna leave a link in the description box below so you can get the book. If you want to actually go and book in a call with experts and people to help you through this journey to get to financial freedom, then I'll also leave a link in the description box below. Or you can go ahead to Google and look up Search Property Buyers Agency and you'll see my face pop up along with my team, which is more than 50 full-time staff helping people like yourself. I hope you guys have enjoyed this video. If you have, smash that like button, subscribe if you haven't already, and share it because it's important that we build this community. Thank you so much for watching. I'll catch you guys on the next one. Thanks, guys.